Good morning folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Happy Friday to you all. Folks, the equity market's price action has become enormously intriguing. The reason that I am saying is because if we look at the Dow Jones price action, especially the price action how it performed this morning and yesterday, remember at the open the Dow Jones index was down well over 400 points. In fact, it was over 450 points. But within a space of a half an hour, it was within the first 1 hour, the index not only reversed all of its losses, but it actually turned positive. Now this left many investors scratching their head, because what happened yesterday was, as you can in the chart, that the S&P 500 index kind of dropped slightly below its 200 week moving average, but then quickly it moved back up. Right now the index is still below its 200 week moving average. For investors, that is really intriguing, because if the index stays below the 200 week moving average, it means markets are likely to endure more pain, i.e. more move to the downside. Now today's price action for the US futures was again very intriguing. What happened early in the morning? The US futures were trading to the downside, then they moved up back in positive territory, again in negative territory, and as soon as the European sessions started, the DAX index jumped well over 1.29%, and that helped the US futures to go back in positive territory. And now, as of now, the US futures are trading higher, well over 100 points. So the question for investors is, which way are we going to move? Well, from a technical perspective, for me the most intriguing and the significance with respect to the price action in terms of a technical analysis is your 200 week moving average. If price can close above its 200 week moving average, then it means that perhaps next week we could see some positive price action. However, if the price closes below the 200 week moving average, this will translate that for the last 4 weeks on a weekly time frame, the price has closed 3 times below this moving average, and this gives a clear signal that the bulls are not winning this fight. Now what about fundamentals? When we look at that, we have few important factors. Firstly, Donald Trump, he has anchored the tensions between US and China. Now he doesn't even want to speak President Xi. And what is the reason behind it? Because he is still blaming China for coronavirus. Secondly, the earnings season, the corporate earnings season that we have seen, we know the message was pretty clear that corporate earnings are likely to be dismal in the coming quarter as well. And the future forecast for the corporate earnings is still very muddy and very cloudy with that. So these two important factors are not painting anything positive for the equity market. Thirdly, and the most important one, it is the volatility. When we look at the VIX index for the last 3 days, it is experiencing positive inflow. In fact, yesterday's inflow was the largest inflow, meaning more money coming into the ETF, for the VIX ETF, since March 19. So this shows that investors are very uncomfortable where the equity market is trading currently, and this is why they are hedging their bets. So let's see how the market evolves from here. But remember, you can always protect your upside or downside position by using AvaProtect. See you guys tomorrow.